Peter, an uncanny read of the markets is just telling a lot of bulls out there, just be careful, just be careful. Peter, how do you see things right now?
Well, you're right. Be careful is the best way to state it, Neil. This is an exciting time for me because, I don't necessarily believe in buy and sell signals because sometimes they're right and sometimes they're wrong. There's a little signal that I've developed from the VIX index. As you know, the VIX index has been very low now for several weeks, and that's a sentiment indicator. A low VIX index indicates complacency by investors and not trying to hedge themselves against the market decline. So here's the indicator for me. If we get below a certain level, and for me that level, it's an arbitrary level, it's about 19.85 in the VIX index. Once you get below that level, this is only in a bear market now, below 1985, and then you break above a downtrend line from the preceding high, that is a sell signal for the market. It's been virtually perfect all year. This year, with about 4 signals, we got a signal yesterday. All my troubles seem so far away.
So, Peter, when you look at that, especially the VIX thing you alluded to right at the top, where it's low and a lot of people aren't worried, that could be a counter indicator that they're getting a little too too content, and they shouldn't be. What do you look at? You're a technical guy. You try to keep the fundamentals out of it. But on that technical basis alone, what would you tell investors to do?
Get the hell out.
Really?
I don't, it's difficult to tell people to sell all stocks. That's usually not a great idea. But the best advice I can give people at areas that I think are dangerous for the market, Neil, is if they're holding individual stocks, I would say put a 10% stop on that. Let's say, for example, you hold a stock that's $100. Say, I'm willing to hold that down to 90. If it goes below 90, I'm getting out. And it's a trailing stop. So if I'm wrong and it keeps going up 100, 110, 120, you keep trailing underneath the highest price by 10%. That way, you're going to protect yourself, and at the same time, you're not going to take a big killing in the market. You're never going to lose more than 10% from a previous high. So that's the type of thing that people might do now. But I'm foreseeing a really continued bear market here, Neil. And let me emphasize that signal that I got yesterday works only in a bear market, okay? It will not work in a bull market.
Those how bad does this bull market get as you see it right now?
You don't want to hear that, Neil.
Sure I don't.
Okay, so I would be very surprised if we don't get back down to the lows, not the lows of 2020, where we had that huge decline in a very short period of time, but I'd be surprised if we don't go back. Ultimately, this is not going to happen in a few weeks, back to at least the lows of 2009 again.
2009?
Yeah. I like the way you said that.
That's depending on the sector. I mean, or the average, that's at least another 50%.
It's a long ways down. Yeah. There are a couple. Here's another thing, Neil. There's an indicator called the Fear and Greed Index. I don't know if I'm sure you've heard of it, but the 2 of the last 5 days, the Fear and Greed Index has been in extreme greed territory, the highest readings in terms of market sentiment and bullishness that we've seen in over a year. So that's number 2. I mean, there's so many things that I could talk about here, Neil. The NASDAQ 100 index, one of the things we look at as technicians, and I don't want to get too technical here, but we look at what we call Fibonacci retracements. 0.382, 0.5, 0.618. So in a bear market, if you get a decline and you start to rally and have a bear market rally, those are the retracements you look at. In the NDX, the NASDAQ 100, if you go to the all-time high and then go to the October low of last year and measure a 382, we came within 0.2% of that 0.382 retracement in the last week. So it's another thing that we look at and say,
Wow.
you know, it's time to start paying attention to the things that might happen on the downside. I think you've noticed in interviewing people, Neil, that all of a sudden there's been a pretty good pickup in optimism again, a pretty good pickup in sentiment.
There has indeed. And most of them don't use these numbers and formulas that you do.
Yeah, exactly.
Right. Peter, thank you very, very much. Peter, I think what gives you added sort of oomph and scary oomph is the voice. You have a remarkable voice. Do you think if you had a higher pitched voice, you would scare the hell out of people less?
I'm going to try and keep my voice as low as possible. Yeah.
Peter, you're a good man. And I think your thoughts have to be shared with an audience so we get all sides out there. Peter Iliades, famous, iconic market figure, just throwing out some of the warnings there. I probably would have liked to sit behind him in math class and all because I would have copied off of him. He's very good at math, very, very good at math and formulas. Peter Iliades, consider what you will. Jackie DeAngelis, what's coming up on the Big Money